Easter week on the U.S. stock market as it responds to ongoing trade tensions between the U.S. and other countries. Yesterday, Wall Street saw its best day in 16 years after President Trump paused some tariffs. Of course, we also saw huge dips in recent days, too. So today, U.S. stocks lost more than half of their gains from yesterday. The Dow dropped 1,700 points. The NASDAQ closed down 5.7%. The S&P fell 5%. If you're wondering how to make sense of it all, how to protect your money, maybe make some, we are bringing in David Jazo. He is a senior wealth advisor with Wilde Wealth Management Group. I like that name, Wilde Wealth.
Yeah.
So this is a wild time right now to be in financials, for sure.
Absolutely.
I want to start with the basics and go through some definitions of words that we're hearing.
Absolutely.
What is a bull market?
Bull market, we have a lot of animals sometimes.
Yes.
The bull market is when prices are rising, if you will, confidence is high, and everybody thinks that they're an investment genius like Warren Buffett, if you will.
Okay, so we're not there. Doesn't feel like we're there.
From there, right.
Okay, a market correction is?
A market correction, by definition, is a 10% decline from the previous highs. So again, we've experienced that in basically 2 days, if you will. Back Thursday and Friday was the first time, actually one of 4 times that we've had 2 days, consecutive days, rolling days, if you will, that have had 10% or more declines. The last one that we had before that was in 2020, so obviously COVID. Before that, we had the global credit crisis back in 2008, so roughly, I want to say November of 2008. And prior to that, you have to go all the way back to Black Monday, which was October of 1987. So really rare to have 10% declines in such short order, and that's what's been scary about this is the snapbacks that we're getting.
We said a bull market, so then a bear market is?
Bear market, I said prices rising with bull market, the opposite with a bear market. If you will, prices usually decline, confidence is low, okay? And that's where everybody starts to panic. That's kind of where we're at.
As we talk about, oh, it's down 1,098 points or whatever, when things are steady and good and everyone's feeling great in the country, where is that? What numbers are we hanging at?
Well, actually, that's a great question. I mean, if you take a look at investor sentiment in general, because there's obviously different ways that they measure that, we're almost at the top end of the spectrum. So you usually want to be a little bit contrarian, where you're seeing everybody be fearful. Those are usually good times to be opportunistic in terms of putting money to work. The opposite is true, is when you get nostalgic, everybody wants to buy the hot stock, whatever that might be, or the right, the hot sector. Obviously AI a few years ago. You have to kind of put that in perspective, and what we have to realize as well is that we went through a period of back-to-back 20% returns in the S&P 500 coming into 2025, which is really rare to have back-to-back 20% plus returns. So what we see now is, again, normal correction. It's not anything that would not happen in a normal given market, but the causes of that correction right now are obviously exacerbated because of the tariffs. Correct.
The president posted on Truth Social a couple of days ago a great time to buy. So is it a great time to buy?
I think that it provides select opportunities. You have to be diligent about, and everybody's situation depends, right? I mean, so if you are still in the accumulation phase of growing your wealth, obviously that's a little bit different than somebody who's getting closer to retirement in the kind of the distribution phase. So it's a little bit different. It's a little bit scarier when you don't have that time to make it up. And certainly there are, if you have cash, and this is one thing that is a positive for the markets potentially down the road, is that there's a record amount of cash. It's about $27 trillion sitting in money markets. That's a lot of, call it dry powder, that can come into the markets. Once we get a little bit more clarity, and it's going to take some time, we have to be patient, but it doesn't mean that you have to buy all at once. Certainly it provides you some opportunities.
And it just seems like there is some opportunity to be had here.
Absolutely.
And even a learning curve with a couple $100 maybe.
If you're starting, if you're just starting to invest, and the younger you are, you want these things to happen, okay? Because it allows you to buy more shares at lower prices and accumulate more.
All right, sage advice. Thank you so much.
You're very welcome, Jamie.
From the Wilde Wealth and Management Group. That is a great name. Thank you, David.